Good morning friends and welcome to the pre-market view. US markets were flat as most of the market participants are waiting for the Fed decision on the tapering, and also since Mr. Ben Bernanke is set to retire, the market is keenly watching out who the next Fed chairman is going to be. Also, the 10-year bond yields in US continues to hover around about 2.6. European markets were marginally positive, but there was sell-off across the banking names there. And when we look at the Asian markets today morning, the picture is mixed. Japan is down almost about 0.69%, but the other Asian markets like Hang Seng and Shanghai are marginally up. Also, the market is waiting for an important data from China in terms of manufacturing index. Remember that the HSBC manufacturing index data that came out was quite weak, and in fact the manufacturing activity in China is at about 11-month low. In terms of flows, friends, FIs were net buyers in the cash market to the tune of about 215 crore, and the domestic institutions were sellers to the tune of about 405 odd crore. But in the index futures, there was aggressive selling by the FIs and they sold to the tune of about 859 crore. Back home, our markets continues to languish, and they were down almost about 1.25% as we had an important RBI policy meet where most of the policy rates have been kept unchanged. And post the policy decision announcement, we saw sharp sell-off across the banking names and most of the other index heavyweights as well. The bond yields have spiked up to about 8.25 from about 8.05. The rupee too has depreciated by almost about 1 rupee, and it's around about 6.25 odd levels. So overall sentiment towards most of the asset classes is negative. And since we have broken important technical levels on the way down, definitely the market bias continues to be negative. So we should be looking out for shorting opportunities in this market. On that note, let me invite Sadhna to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view on derivatives. Yesterday, due to RBI's monetary policy and forecast of lower GDP growth has worsened the market sentiments, and selling pressure came across the board, and Nifty finally ended the session with loss of more than 1%. In this period, we have seen market participants have squared off their long positions as around 6.97 lakh shares were reduced in open interest, and Nifty futures premium decreased from 46 points to 43 odd levels. And put call ratio also decreased from 1 to 0.98, indicating call option has added more number of shares than put option, which is clearly visible in the options activity. Call option has added around 38 lakh shares in open interest, whereas put option has added around 31 lakh shares in open interest. If we see 5,800, 5,900 followed by 6,000, call option has seen a good activity, whereas on lower side 5,700, 5,600 and followed by 5,500 put option has seen a good activity. Yesterday also we have seen markets tested 5,900 once and it fell below the mark of 5,800. So this 5,700 would be important level to watch for, and as we are trading below our weekly VWAP of 6,000, our overall bias for the market is negative. Our lower range would be 5,720, and from intraday perspective one can go short on Exide Industries with a stop loss of 128.75. Thank you.
Here are the important news and events that we are tracking today. First of all, the numbers which are going to be out today. HCL Tech numbers will be out in the morning itself. The net profit that we are looking at is about 1,060 crore. There is going to be about 2.73% growth on a quarter-on-quarter basis, and the expectations have actually increased post the positive numbers from Infosys and TCS. So there could be a quick positive reaction, but we don't think there is going to be a case for a significant up move in HCL Tech. Bharti, we are looking at a net profit of about 750 crore. The top line growth is going to be muted at about 4%. But it remains to be seen what kind of improvement are we really looking at in the ARPUs, because that is an important indicator for the telecom stock. ICICI Bank, stable set of numbers are expected. The net interest income growth is likely to be about 21%, and the net profit growth is likely to be about 24%. Also, the asset quality is going to be quite stable. JSW Steel, we are looking at a net profit of about 295 crore, and in case of United Spirits, the PAT expectation is that of 141 crore. The government is looking at divesting about 7.64% stake in National Fertilizer Limited or NFL, and we have seen that whenever the government decides to divest a stake in a company, there is a quick negative reaction in the stock, and similar is the case with NFL. The floor price is at about 27 rupees per stock. So the stock has already corrected, but there could be some more negative reaction in the stock. And the government has also decided to divest about 5% stake in Coal India Limited, and most of the unions and other related parties have agreed to it. Earlier they were looking at divesting about 10%, now they are looking at 5%, but the overall sentiment towards Coal India also has turned weak. The government has come up with some kind of encouragement for investment in the infra bonds by reducing the withholding tax to about 5%. So they are trying to mobilize some more funds through the foreign flows by providing these kind of incentives, but given the sentiment, one is not sure of what kind of response they will get, and the retail stocks would be in focus for the next few days as the government is looking at making some changes in the FDI and multi-brand retail policy. As per sources, there could be some more relaxations in this particular policy, so there could be some positive reaction in stocks like Trent and Pantaloon and Shopper Stop and so on and so forth. NTPC board has approved about 3,363 crore in the thermal power project, and Petronet LNG, which actually came out with a disappointing set of numbers, is looking at selling about 18% stake in Gangavaram terminal project, and TVS Motor is looking at launching few more models in the Kenyan market. They have already set up a facility there in Kenya, and they are basically expanding their footprints in the global market. So this could be one stock that could be in action. Coming to the stock specific news, Hindalco managed to refinance about 4,700 crore of loan at a much lower rate of interest by about 300 basis points. The stock has corrected quite a bit, so it could provide a trading opportunity, so one can go long there with a stop loss of 84.75 and a target of about 89 to about 91. And Hero MotoCorp, this stock has remained quite stable in the uncertain markets, and there are expectations that the MSCI weight of Hero MotoCorp could go up, and post their Q1 numbers and the new product launches and the fact that the monsoon has been better, the sentiment towards Hero MotoCorp is positive, so one can go long there with a stop loss of 1814 and a target of about 1907 to about 1945. JSW Steel, Jindal Steel and Power came out with a disappointing set of numbers, and the overall sentiment towards metal stock continues to be negative, so one can short Jindal Steel and Power with a stop loss of 207 and a target of about 196 to about 193. That's it from all of us, friends. Have a good trading session and see you tomorrow at the same time.